These dudes were super, super funny with the drone. They're literally just standing there watching it right now. They're like, yo, what is this? And wait, whoa, the screen just went completely black for me. You can still see it though. Just wait until I zoom out. Check this out. So they're just chilling on the side of this thing. And then when you zoom out and realize where they are, it's kind of nuts. They're literally up on like this fucking plateau thing. It's like, that's not a insignificant slope. And it's all this loose gravel. Like, look where these dudes are. This was still super early into the trip. All right, let's pause this and let's get the party started, shall we? I'll move you over to our standard screen, which is here. Get rid of that. What's up, Outliers? Great to see everybody. Happy Monday. Let me grab the chat so I can say hello. As always, if there's anything that you want to hit, let me know. Open session. We are here to cover whatever's top of mind for you all. So we got my boy Paulo. Paulo, it's great to see you, man. It's been a minute. How's business been for you? We got Zachariah, steak and gravy. Steak and gravy. I don't know about steak and gravy, to be honest. Steak and gravy. I don't think I would do gravy with steak, personally. That seems a little not my vibe. Then we have Joey Hater. I'd rather be skiing. Wait. Shall we start with the market as a whole? Because I think that there's a lot to talk about, and there's a few things that are really top of mind. One of them happens to be the current probability of a cut. I don't know if you guys saw, but the probability of a cut, according to the Fed Watch tool, has literally cratered from over 30% probability for 50 bips. And now it's up to almost a 20% for no change, which is massive. Here you go. So this is huge. And the reason why it's huge is because this is showing us quite literally real time how none of this is well defined or understood at this point in time. That's what I see here. Like, hands down by far. When we have these kinds of movements, right? If we look back over a week ago, just a week ago, we had the probability of no change at 0. A month before that, it was at 29%. Now, a day ago, it was 2.5. Now, today, it's 13.75. So this highlights a massive, massive integration of information based on the jobs numbers that we saw last week and the market rapidly trying to understand what the path is moving forward. I think one of the biggest mistakes we're running into right now is we have the market trying to front run every single one of these moves. And the market's been sorely disappointed several times now, which I actually think is why, if anybody has been paying attention to the positions that I'm talking about, the kind of way that I'm positioning myself leading into the 7 Nov meeting, which is a month from now, thinking about the movement through the rest of the year. This period of time is the dumbest time on planet Earth to give back all the money you've made over the course of the year. It's literally the dumbest time to do it. Because the reason why it's so dumb, I don't know if I've mentioned this, but it's pretty fucking dumb. The reason why it's so dumb is because if you think about what the market has done so far on the year, we're coming up to a point where we do not know how this story goes. We have exactly 0 references. So because of a complete utter lack of references, we can't come up with any sort of predictive modeling around what we think may or may not happen, which I actually argue is a good thing. The reason why I think that's a good thing is because all of these other people that have like these really effective models that essentially have most of this stuff fully priced in really well, they don't have much in order to model at this point. So that actually levels the playing field a little bit, because if there is information to model, people that are far more capable literally than all of us will model it much better than us and come up with a more defined systematic edge. So with all of that as a context, I do see like partial benefits to this. Now I got to charge my watch for a little bit. Kind of like my phone. I don't like the phone getting too low on battery. It's the same thing with the watch. We don't let anything get too low on charge. That's part of my like OCD. I also realized that the boom here actually hides part of my arm. Actually, if I'm behind it, maybe. Yeah, so it makes my arm look like it's floating sometimes, which is kind of cool. But right now, I see broad market super confused. Nobody knows what's happening. Everybody's trying to price in this move. And the prospect of trying to front run it is dangerous from our trading perspective as retail traders, in my opinion. So I think right now, name of the game is don't give back the gains. That's really what I believe. There's going to be opportunities that are going to show. It's the same thing. We were talking about this during the pro live stream yesterday. There's a lot of standard ideas you can run around an election, for example. But for me, I don't see a massive reason to offer a bunch of that kind of more open-ended risk when we're just walking into something that's completely unknown. I think that the overwhelming probability of quantitative easing coming back into the conversation is not zero. And that would be fucking disastrous. So I purposefully avoid all parabolic statements, unless it's like purely in jest, which I think most people can tell when I'm joking. But I avoid being hyperbolic because it decreases, the impact of words. If we say everything like Trump, right? Everything's the best, the greatest, the biggest. And like when you hear somebody like that talk, you're just like, yeah, okay, like this thing is probably okay. So with something like the market as it is now, without all hyperbole, like this is massive. Like where the market is right now is massive. And the way that this ends up playing out is massively up for debate. And the scenarios on how it plays out, I see them very different. And the market impact is huge. It's genuinely huge. So when I look at this, it starts to lead me further and further down the line of I do not know, and I'm not supremely confident in how well this stuff has been priced in. And it goes back to this thing I've been highlighting, the emotional market idea. This is that. That's what I see here. I see a market that if there is a series of relatively not good news, I'm not even going as far as calling it bad, but relatively not good news, I see the market having a visceral response because right now we're still near all-time highs. So take from that whatever you will. For me, that is a function of being very, very tight with the risk that's out. It's being very selective in the plays that I'm putting on. Zachariah says, I agree. It's like a 4-year-old passing McDonald's. That's literally a perfect way to phrase that. I love that phrasing. I think that's exactly what it feels like. So this is also a really good time, in my opinion, to look through the portfolio. And if you haven't taken the time to analyze the way that your portfolio or your systems behaved during something like the 5th of August, if you haven't taken the time to synthesize this move into your portfolio, into your trade log, to see how the portfolio behaves when the broad market runs from, 57.15 down to 51.20 over the course of 3 weeks. Like that kind of move is entirely in the table here. Easily. Easy. This wasn't even on really bad news. This was just on some bullshit. So if you think about the kind of moves that are possible on bad news, it gets ugly. So the reason why I bring this up is because a lot of people, they build their positions in good times and they don't think about at all the positioning during bad times or enough. And that's a massive problem because one of the things here, I'll ask you in the chat, what's going to happen? What's one of the first things that will happen in the market if we have this kind of move? This isn't even that bad. I want to be abundantly clear. I'm using this as a light reference. Using this light reference, if this kind of thing happens, what's one of the first things that happens in the market? Obviously, price goes down. Duh. Okay, got it. Not asking for that one. I'm asking for a structural implication. There is a structural implication with this kind of movement, and you need to be aware of it, because if you're not, you're setting yourself up for a problem. Any guesses? Gamma hedging? No, not so much. There's something that happens that will impact all of your trades, essentially. Volatility will move. We know that. We also know that we will absolutely see bigger price swings. We know that. Shrey has one of the primary points, margin expands. That's important to calculate into your approach for anything that's not bought. If you buy something, then you're like, if you buy an option, your margin for that option is not going to move that much. Its marginable value will change, but you don't owe anything additional in margin. Let's take a look. I'm actually curious. Let's take a look at 15. I'll use SPX. Let's take a look at 8 July compared to 2 August. What do you think you're going to see in the options chain? Keep following this train of thought because you guys haven't hit it yet. 8 July. Zacharias says, chin dip. Paulo says, does it have to do with the value of the dollar? It doesn't. I'm talking from a functional perspective. This is the kind of thing that's going to impact all of your trades near uniformly. And if you use the hint that I gave you about not necessarily thinking about bad times in the trades, there you go. Shrey got it. Shrey plus fake one internet point. Does that make sense to you all? What he just said? It's a really, really important concept that I don't think people pay attention to. And again, if you're trading one lots, you probably don't care that much. There's not a massive reason for you to care if you're trading one lots. But if that one lot happens to be a larger part of your portfolio, then it becomes actually a pretty big problem. Zacharias says no. I'm glad you said no, because I'm going to pull up the blackboard and you know what I'm about to do. I'm about to draw it out. I'm about to make this stuff, because I know that that's just like a coy way of you guys asking to see the masterpiece that I'm able to construct. Totally understand that we want to see that. I would want to see it too. Again, it's kind of like watching Beeple, do his work, where you just kind of see just a master of their art. And you're like, well, shit, I don't know if anybody can draw anything better than this, which I haven't seen it either. So let's get into this. We have to pull up our doc. What was the last video I was working on? That's always the fun part when I pop this open, is I get to see what I was working on last. This was the old AMA. What was this one? This was trade review, options trading for beginners. That's the last one here. Okay. We get rid of that. Let's add this. All right, let's do it. Grab my little notepad. Time to get busy. Okay. This is probably one of the most critical parts of this, is what color do we want to use? I'll show you the color palettes. This is the colors that I have handy. we don't like any of these, we can modify some of them, like bright French blue. I don't know about French blue. French feels a little weird. Maybe like that. What color is that? I don't know what color that is. Black. Okay. So that would be good. Yeah. If we do black, it would be it's like open to interpretation, right? So I kind of like that idea, Joey. This would be more of a cerebral exercise, and it'll be the thing where they put up like those color swatches. Zachariah says orange and black. Yeah, I love that. Orange will be festive. Great call. And I think that should be about the correct spot out of the way. You guys shouldn't be able to see most of it. Okay. We have our color. I just want to see how far over you guys can see. So I have this sized up. Okay, perfect. I have it. I have it perfect. As expected. So we have bid. Well, first, actually, before we do that, let me save. And then let's grab an example. So here, let's grab this 39 DTE. Let's let these load. I'm going to grab a screenshot so that you have a visual reference as I'm drawing my art masterpiece. So I have really big plans for this. I'm going to use SPY just because the numbers are smaller, so it's a little easier. Plus, I imagine most of you probably don't love that. Most of you probably would trade SPY over SPX anyway, so perhaps this is even more relevant. And I'm scrolling here. Let's grab a screenshot so that we can see all of this. And I want to go out to like this 12 delta. Got to scroll up a little bit, my bad. Okay, I want like 15, 16 deltas on both sides. Here's the at the money. Grab a screenshot. Okay. Now I have to save again because I have OCD and I know the probability of when I paste this in, sometimes it just crashes. It didn't here. That's fantastic for us. Great news. Big win. I'm going to squish this down just a little bit. You don't have to worry so much about reading it. I'm going to read most of it out, but I want the point to be clear. All right, so let's start. Right now, if I go back over here, does this tell me we lose that? That's okay. IVP is 13%. So we have IVP. We'll do IV and IVP, not BEP. It is 13%. I know that this is behind me. It's okay. And IV is 12.92%. And the date here is 8 July. 8 July. I'll put it over here. Okay. Now, let's talk about bid-ask spread. So we have call side over here, put side over here. We have these columns. I, for some reason, cannot stop cutting off the last part there. Nailed it on that last one, though. And then we have bid-ask here. Doing the same thing. Nailed it. So, first things first. Options 101. What is the bid? What is the offer? What do those mean? We'll start with the basics. Good chance for a little bit of a recap. Bid, ask, also known as the offer. What do these mean? Need a little help here. I am phoning a friend. Nick is in the house. Hello from former 50 state Florida. Yeah, so you guys are, I think, are now also synonymous with Atlantis now, right? I'd rather be seen says the price is one willing to sell at and the price one is willing to buy at. What people are willing to pay. Okay, good. So overall, bid is the most I'll pay to buy. The ask is the cheapest. I'll sell. Good. Now, who is this? When we look at, let's use these 29, 31. I'm trying to find one that's the same on both sides, the same exact delta. I see 24, 543, 572. Market maker. That's one of them. What else? What else is here? Citadel Ken Griffin. It could be Ken Griffin, like maybe he's sitting on the toilet, putting an order in. Holders creating the options. That's not correct. RK or RC could be either of those. So what am I, as I'm saying these, what are you picking up? It could be Ken Griffin. It could be the cat. It could be Cohen. Do you see what I'm alluding to here? I imagine some of you are apes, and maybe I have to use like fucking memes. Maybe that would be, I bet you if I use memes, you guys would pick up on this stuff in like 4 seconds. I just realized my entire teaching modality has to be adjusted. Zachariah's got it. Bingo. Zachariah says anybody, which is exactly correct. So what does this mean? Well, from a bid-ask spread perspective, market makers, they have certain imperatives that they have to follow, and they have certain motivations to make markets. So some of their motivations is their status. They have to maintain markets in certain things at a certain percentage. So they have to offer markets. They also get payment for order flow. So even in instances where it might not look like there's a ton of edge in the option, they can still make money from payment for order flow. That's part of their return profile. It's important for you to know that. Anybody is anybody that sits at these levels. So say, for example, at this 543 put, right now it's sitting bid at 313 and it's offered at 316. So now let's say, for example, I come in and instead of somebody bidding 313, I, Eric, this is me. Right now I have a big bulging disc in my back. And I have a sciatica. So right now my right leg is fucked up. So my arms really wouldn't be that high, but I don't want to miss you guys being able to see this bulge in my back, the disc bulge. Well, it's actually a right bulge, and we would be looking at me. So yeah, so this is right. It's a right transfemoral. So this is right. So we have a bulge there and a fucked up right leg. Left leg is having to compensate a little bit, so it's a little bit longer. Right leg can't extend super well, but I'm still happy. I'm still just happy to be here. So now I whip out my phone And I whip this hand all the way around, just around my head like that, like that right there. And I throw in an order. My order is buy to open 543 put at 314. So here I see homie is offering 313 and I say, fuck that guy. Fuck that guy. I'm going to undercut him. So now, as soon as this order hits the exchange, this goes away, and now it's 314. Important note, this order is not gone. I'm just now making the market on the bid side. Whoever originally offered that 316, they're still making the market on the 316 side. This person's still here. They just moved down in line because somebody's willing to pay more. Okay, so these are kind of some of the functions of a bid-ask spread, which I'm actually going to update the title of this, Functions of Bid-Ask Spread, just so that people know what we're looking at. Cool. So that's what this all is. Okay. So now we have to go to our next scenario. But before we do that, we need a comparison. So here we're looking at, what is that, 39? We have 39 DTE. And we're looking at a 24 delta. Now, on the call side, that puts us 252 by 254. 252 by 54. Not 94. On the put side, that puts us 313 by 16. What's the very first thing we notice here? What's the difference in the bid-ask spread for the call side versus the put side? Same expiration, same exact delta, not off by one, same exact delta, 0.24 for both. What's the difference here between the call and the put side? And Corey has to go feed his ferret. Totally understandable. Get that. Totally. So this will be for everybody other than Corey that's not feeding their ferret at the moment. Josh is talking about the difference between them is that someone's about to lose money. Could be. Yep. Okay. So Corey's on it. So what's the difference? If we look at the call side, Ree says, I'm lost, but know that puts tend to be more expensive. That's exactly fucking it. So what I'm telling you is that at the very same delta, the difference between these is 0.02. The difference for these is 0.03. That tells me something inherently. I already know something. If I go into the trade tab now, we're still in SPY. I go to that same 39 DTE expiration. I know now, if I look at the vols for this, this is priced at 12.2 vols. This is priced at 9.85 vol. 12.2%, just 12.2 vol, 9.8 vol. Okay. Let us see where this goes. I don't want to lose all of that, so I need to save. And then, actually, no, we can just scroll down. Forgot. I don't know how to extend the canvas, but that's all we got from here. So let's now fast forward. What was the date that I said? You guys know you got to keep me honest here. I don't fucking remember. July to what? August, what? 6th? Nope. Damn it. You guys let me fuck it up. August 2nd. August 2nd. Damn. Roaring Titty's here. Everybody, shout out to the fan favorite Roaring Titty. Also, gotta be honest, Roaring Titty, a little upset at you right now because you just let me put August 6th instead of the 2nd. You're the one that's supposed to be keeping us on the fucking rails here. So you get a pass always because I love the name, but you can't, I can't be moved and left to my own devices. And I think you know that. So there's that. All right, so now we need to find the closest primary expiration to 39. We'll take a look at this 13 sep and 20 sep once this loads. This is already going to compare it slightly differently. The reason why it's going to compare it slightly differently is because the amount of time, right? But we're going to manage it by time. So we're going to make them the same. We're going to look at these metrics relative to time. So don't worry about it. But I am going to use the next primary expiration. Off Putin says no meme or GME in the video title and far less viewers. For which one? For this one? Yeah, well, the Monday live streams tend to be somewhere around this. Yeah, around like 50 people. The GME live streams normally are quite a bit heavier. So absolutely correct observation. Lots of people love the fucking meme stocks, man. And I don't blame them. They're fun. All right. So this is just taking its... I mean, this is taking as much time as it possibly can to load. Let me see. Might have to restart this because this is like struggling super hard. Little unfortunate. Give it a second. Because I want you guys to see what's going to... There it goes. Thank God. I want you guys to see what's going on by yourselves. Like, I don't want to tell you. I want you to see it for yourselves. Okay. So now, this is going to be 49 DTE. I'm going to try to find a 24 delta if possible. I can see one there. I can't see one here, but I can see a 25 and 23. So either of those will be fine. So now let's use this 509 put. So we have a call. So we're going to do delta 0.24. We have call, put. Let's take a look. So for the call side, the closest thing to a 24 delta, great question for I'd rather be skiing. The reason why I'm using 49 DTE is because I want to use the closest primary expiration that I can to 39 DTE to make it as close to the same comparison as the first scenario. I don't want to use the 42 because if you go into the weeklies are inherently less liquid than the standard expirations. So that's why I'm using this, even though it's 49 DTE, we'll make it relative to the time. So we can literally just divide all of the numbers essentially by the DTE to see it on a per day basis. But I want to make sure that I think this is a more important comparison to keep the primary expiration the same because it'll have a much bigger impact on liquidity. So now let's take a look at the put side. We have us 601 by 605. Which puts us at 0.04. The call side here. This looks a little closer. We use this, the 560s, because it's a round strike. I like that better. So that gets us 416 by 421. So 416 by 21. So this is 0.05. Let's take a look at our vols. 15.8 by 20.8. All right, let's analyze what's happened here. First, before even getting into the difference between the remaining time and stuff, but what do we see here? Roaring Titty says vol is implied volatility. That is 100% correct. Roaring Titty gets plus fake 1 internet point. Corey says, I don't want to move off topic, but I would like to know how IV is derived purely on price action DTE. Great question. I have a video for it. What we're using here is called implied volatility. So we're literally just pulling it out of the options price. But you can watch this video, Corey, that I'm linking here. The video up above. That goes through all different kinds of vols. So it'll be, I think, much like that. That'll explain it much further in detail. But essentially, the way to summarize it for what we're using now is just the market's expectation for volatility. That's how you think about this. I'd rather be skiing says we see a tighter bid-ask spread on put versus call in higher IV. Okay. So let's analyze this piece by piece. The first thing we notice is that I'd rather be skiing says, how the hell do you pull up those video links so damn fast? You have a huge number of videos. It's hilarious. So the reason why I can pull them up so fast is the same reason why my videos do really poorly, because I don't title my videos like bullshit. I title my videos with exactly what they are because that's how I personally like to consume content. So for me, it's super easy to search these concepts because the videos are literally labeled with the concept. So it's exactly why. But so the first difference we see, let's break these down. So calls versus puts. We go bid-ask spread. It goes plus 0.03. Vols goes plus, that's 9. That's actually a little more than I thought. 6. Put side plus 0.01. Vol is plus 8.6. Okay. So we can see a few things. The bid-ask spread in the puts changed less, which is actually not always the case. But what I want to highlight though is that this started at a higher vol compared to this. So the very first thing though that you now know definitively is what happens to liquidity when volatility expands. This goes all, I'm tying this all the way back to the very first question that I asked you and why this matters. This matters because this will impact every single one of your trades. So the question is, what happens to liquidity? Reese has it. You have wider bid-ask spreads. Liquidity, therefore, decreases. This is a natural calming function to markets. As markets, vol goes up. If you think of vol today, think of your bid-ask spread. It looks like this, right? So this is the bid, this is the ask, this is the bid-ask spread. Then we have vol up. Your bid-ask spread, depending on how much vol goes up, now looks like this. Bid, ask, the difference here, bid-ask spread, widens. This slows down people's ability to transact. This is a natural slowing function to market movement. So as volatility expands, liquidity expands, that slows down people's ability to transact, therefore a natural calming function to markets. The reason why this matters so much and why I'm spending the time going over this with you is because right now we're looking at the bid-ask spread in something like SPY, right? And what I'm highlighting is SPY is quite literally one of the most liquid products that exists. If we take a look at a scenario now slightly inverse, let's pick something like Rocket Labs. And let's just look at this AUG expiration. We'll stay in the AUG expiration for both because it doesn't really matter. Fuck, I forgot what day in July to pick. Damn it. What is this? I'm going to go, let's go further back. June 5th. June 5th. And we're going to look at the same scenario. I'm not going to draw it all out because you'll be able to see it. But I really want you to understand this point because many a dollar has been lost on this exact concept. All right, so it looks like it's loaded. Let's look at the 19 July. Actually, no, we have to go further. No, it's okay. Let's do 19 July. And let's just do the 30 delta because it's right here. The 30 delta put is 15 by 20. Now let's go to August. I just did this. I think it's the 2nd that we need. Right now it's loading. It's still loading. I can't tell because I use a program called Windows Grid so I can put things where I want them. And it's literally completely covering the exact spot. No, it says paused. But it definitely ain't right. Did I not hit go? There it goes. There it goes. Okay, great. I just didn't hit go. So when this loads, you should be able to forecast what you're going to see based on what you just learned. When this does load eventually, we'll look at two different scenarios here. It's starting to pop in. Goodness, this is super slow. I'm going to see if it loads here. If it doesn't, I'm just going to move on. Long story short, it would become wider. That's what you would see here. I wanted you to be able to see it, but it's literally just taking forever. So with less liquid products, when volatility expands, that process that I just showed you in the most liquid product that exists becomes exceedingly pronounced. It becomes way more extreme. And that's exactly what you would see here. You would see a much more extreme representation of bid-ask spread widening. So why does that matter? Because when you're trying to get out of your trade, literally the fill, where you would get a fill on your trade, can meaningfully change the P&L of your position. And I've given you different scenarios previously of when I've traded things like 0DTE SPX options, and we have a giant big end of day run up. We had one not too long ago. I literally think it was Friday. Let me take a look. 5 day, 5 minute. Let's take a look at SPX. Yeah, this. So the fill that I got as this move was underway, absolutely, it was a terrible fill compared to where I was supposed to be. Where I was supposed to be matters tremendously. And the reason why it matters is because if I put a stop in, let's say for $1, and it ends up getting triggered during this big giant candle, and it's a short strangle, and on that dollar, I end up getting filled at $3. That has a massive impact. That slippage has a massive impact on the P&L of the position. So you have to be very, very careful with liquidity, especially if you're using any sort of standing market orders to get out. Off Putin says that's why I ignored the value column when deconstructing RK's trades. The value is based on the mid, often super wide, and many times no bid. Yeah, exactly. Yep, completely agree. The value, like the theoretical value of something, doesn't make any sense. Yeah. Completely agree with you. And that's also completely correct. That's one of the reasons why RK entered the trades the way he did, was to try to minimize being front ran and the market impact of that. So, yeah. Sweet. So, taking that all the way back to the very beginning about bid-ask spread, does the impact of bid-ask spread make sense now? Do we have a decent understanding of why bid-ask spread is really important to understand the relationship between volatility and bid-ask spread? Because it will have an impact on all of your positions, and it offers a terrible scenario that if you're resting some sort of market stop order, which if you're resting a stop, it's the only kind to use. It's literally the only kind to use. The idea of using a stop limit on an exit is exceedingly stupid. So you have to take that into consideration, though, because where you might get filled could be a lot different depending on what volatility looks like. Your ability to get in and out at fair prices is going to change significantly. I'd rather be skiing has the exact reason why using a stop limit is stupid, because it can go right by it. Does that make sense? That's while we're talking about stops, because I think it's actually really important for people to understand that concept as well when it comes to like resting a stop order. So let's say Reese says I could use other once over, another once over on orders. That's essentially what a stop is. That's actually quite literally what a stop is. Oh, I see what you mean. Like you have a stop limit, but then if it's over the limit, because in that scenario, it's the same thing as a stop market, right? Like that essentially, if you were going to get filled on a stop limit, you would get filled the same spot as a stop market, and it would be generally favorable, not an ideal fill, but it would be generally favorable. If you're in the scenario where a stop limit doesn't get filled, the stop market is going to have a terrible fill, but you're going to have a fill. Whereas with a stop limit, you could still be in something as it's making this terribly adverse move to you that you wanted to get out at, but you were trying to penny pitch and not get out at, a super disadvantageous time, based on your perception of what that means. And then it can lead to not actually exiting, which is quite literally catastrophic. So gotta be stop. Whenever I use them, gotta be stop. Corey says, so you skip over the bid and ask. Well, if you're using a stop market, essentially what that means when you put in a stop market order, that tells the market, let's say I sell a call for $1. So here's my dollar, here's the dollar level. And let's say that I put in a stop that I want to get out if the call's at $2, right? So $2 would be up here. So if I put in a stop market, what that tells the brokerage is I want my order to move as follows. This is pertaining to the option. It can be pertaining to the underlying as well. But pertaining to the option, what that means is as the market moves up, and it hits the threshold of $2, it's going to turn my order into a market order like that. So then the next available market is where I'm getting out at. So could that be outside the bid and ask? So certainly. Could it be within the bid and ask? Could there be price improvement? Technically, yes. Insanely improbable, but technically, yes. So the way to think about stop market is that is when you are putting the line in the sand. I'm going to get out here. That's the spot you have to get out. That's a stop market. Stop limit is when people try to be a little more calculated. They don't want to get a really bad fill. The problem with the stop limit is you can find yourself in a scenario where you don't get filled, which is, again, the whole point of a stop is to get out at something at a certain point, and then you're not out of it. Giant problem. We don't want that. So I don't really remember how we got onto the bid-ask spread thing, but I'm glad we did because I think it's kind of super, super important. Now I'm going to scroll back up to the top, though, because my boy Paulo had a question. And Paulo says, the last couple months I decided to buy precious metals, managed to get 10,000 out of silver, 700 out of copper. Good investment in general? That's a great question. So metals right now are like really, really topical. And you can see this reflected in a bunch of different metal markets. So Paulo, the first question for you is, are you playing futures? Are you playing commodities themselves? Or are you playing like miners of some sort or some other kind of like copper ETF? The reason why I ask is because it actually matters to me quite a lot in terms of how the positions would behave and then the investment thesis itself. Because, for example, there was somebody I was just talking to recently that was saying essentially they lost the overwhelming majority of their portfolio because they had put on a bullish play in gold miners. But even at this was a trade that was a while ago they were talking about. I want to say it was like 21 or 22, that they put on a bunch of bullish options plays in miners, gold miners, that ended up not really seeing appreciation. Even though the commodity gold went up, the miners struggled a bit. So that's why I ask if we're talking about trading something specifically, like the miners or if we're talking about trading the commodities themselves. Vladimir says you were talking about the upcoming Fed interest rate cut probabilities and you sidetracked into the bid-ask widening. Okay, got it. Thanks. Yeah, I was curious how the thought moved around. So, but right now, going back to Paulo's original thought process in terms of metals, I mean, metals have been crushing it. Gold is starting to rotate down a little bit. So my gold position has been down for a little while since it just is kind of starting this declining. Right, it's still consolidating. It's still considered very range bound, but it's not going up. So that's down. Silver had been doing a little bit better recently, but I expect silver to probably follow suit with gold, where it will continue to oscillate a little bit sideways here and consolidate. So Rudy says physical. Yeah, then I think that those are okay. Now, copper is a little more tricky, I think, just because the way that copper is used has a slightly different look to it. So I don't think of it quite exactly the same as trading anything else, but I don't dislike it. So if we grab copper, when I look at copper on a long-term time frame, copper is coming down, right? So, and when I say coming down, obviously I'm talking long-term time frame. I'm not talking near-term here. So I don't hate copper longer term, but to me, it's still at a spot that I don't love the overall value. Like I really would want to see it above here. Yeah. So it looks like it's starting to gain a little bit of footing, but in those medium time frames, it doesn't look exceedingly healthy to me. And for me, when I look at copper, near-term price target looks something like this, 520 handle, but it's got a ways to go before it finds itself there as far as I see. So yeah, that's the thought. Sweet. Let's talk a little bit about, I want to talk about the paper trading challenge really quick. So this is something that we started for some of the Outlier Pro folks. I used to host paper trading challenges just to give people repetitions on how to do stuff. But I think even though this is restricted to them, we can talk about it. And I think the process would be really, really good for other people to follow along. I mean, you literally can create your own version of this. But essentially what I started doing is just poking through and seeing who's doing what, getting some ideas of some of the positions that are being traded and how they're going. It's still very early stages. Most of the trades are open. So there's not a ton to pull out of these just yet. But when I see some of the trading activity, one of the things I want to highlight to people is the number of transactions you make as a trader is very important to carefully monitor. And the reason for that is because every single time you go in and you interact with the market, you're playing with that very bid-ask spread that we talked about, and you're increasing overall friction. So I think when I'm considering overall initial thoughts, it's to be very calculated with how many positions are going on, when, and to do what. So I like so far a lot of the general themes. I don't necessarily see a lot of what I consider to be stacking strength. I see some of that with energy being played in a few of these, but not as many as I would expect. So we also have obviously our apes that are out there wheeling and dealing some GME, which is great to see. What are these? 17 Jan 25s. I don't dislike that at the 17s. And then the 8 Nov 23s, I don't like as much. Oh, these are sold. I see. So these are sold against these. Okay, I got it. So the opening basis on these, by the way, would be different. because if you're paying for something, I think we have that codified. Paying is a negative number. Yeah. So anytime that there's bought to open, we need to use a negative number because you're in this context, you're putting money out just for tracking purposes. But yeah, that's an interesting play. We can model that one. A lot of XSP, which is cool. Specialization is fine. DJT, that's a really interesting one. So this looks like playing DJT to the downside. Disney, interesting. Disney's getting smashed by hurricanes right now. Some of it. I'm actually curious how Disney does around hurricanes. I'm going to restart this really quick. So I'm going to move you guys over to this screen so I can restart this. I have to like input my password and stuff on the main screen. So just give me one sec. Oh man, it's like fully locked up. It literally won't even close. Interesting. I might have to do the old Control Alt delete it because it ain't having it. Yeah, so we're gonna have to kill the process. Out you go. All right, let's see if we can get back in. Off Putin says sister was at Orlando just before Helene. Fine weather and no lines. Yeah, that's awesome. I didn't follow the path of Helene, but this one coming up looks like it's like super not good. I mean, we could take a look at the latest. I'll grab a thing for that too. Hurricane Milton, fucking nerd. Yeah, so Milton, where's like that whole little path thing? Normally they have that path. There you go. Yeah, so Milton looks like it's going to be pretty fucking ugly. At least as far as I could tell. All right, we got Thinkorswim started back up. We're back in action. I'm going to move you guys back over to the main screen. Then I'll move you guys over here. Well, the funny thing about Milton is that Milton, to me, I would be pissed off if I was Milton too, because it's straight disrespectful. I'm going to run this through desktop audio so that we can listen to some of this dude and see what he has to say. And then I'm going to grab the pup super fast. So I will be right back.
Could actually strengthen. I think it'll weaken right before it comes onshore as either a 4, maybe a 3, and that's going to be late Wednesday, early Thursday. But take a look at how all eyes are on Tampa, Florida. When you look at the spaghetti models, I know we've got a lot to choose from here, but right now it's coming true. It's showing a true track. About 90% are in line with it coming right into Tampa. Zoom in tight there because you need to look at this. If it goes right where my foot is, okay, right there, it would be just north of Tampa, but that would put all the storm surge into Tampa, and Tampa Bay is directly under that number 48. It would be, Nora, I used this analogy before, it's like the water has nowhere to go. It's like taking a gallon of water and pouring it into a Dixie cup. You're going to fill it up, and then it's just going to bubble up and bubble up and bubble up. You betcha. For everybody in that area, if this holds true.
So this overall looks super dicey. This looks super, super dicey. Okay, so it says that it's going to weaken a little bit. I guess that's good. Man, look at that. So it's supposed to hit as a category 4? or 5? I'd rather be skiing, says 12 to 15 foot storm surge for areas south of the. I saw that. I was actually really curious how far inland those kind of storm surges would go, out of sheer curiosity. Because, I mean, to me, that just seems like a lot of Florida is very flat. So it leads me to wonder. These I'm going to delete. And then let's talk about a few other things really quick. Get rid of that. All right. So first things first, I'll talk to you about a Raytheon trade that I have on. We'll go over these more in detail during the live stream tomorrow. But this one, I just need to adjust some of these short-term stops. This is just being played via some short puts. And I literally entered into it, I want to say on the 1st, if I'm not mistaken. This was just essentially playing the Iran-Israel news, like quite literally. That's the amalgamation of all the research that went into it. Yeah, so I got into it on the 1st. So that's essentially just playing the move there. I had the 19 deltas. I do wonder, with the move that it's had, if I would have been slightly better off using calls, but I think overall that still looks fine for the put side of the equation. And then I have another one that's coming up on time to manage, which is CLH. And this is just a variance risk premium play. This is still performing absolutely fine. It's well within bounds. But this was offered, yeah, it was a 15 delta short strangle. So this is just playing the persistence of this risk premium. The only reason why I'm not taking it off yet is because vol is actually expanding a little bit. It shouldn't have earnings for a minute, so we should still have a little bit of time on it. But it'll be coming up on time soon when we get into the earnings season and vol starts to expand. So those options will have to come down at some point. IVP is 98%, which is E-minis, Russell, and NASDAQ are all rallying after hours, which is also kind of interesting. We have crude. I've noticed this the last couple nights in a row where crude oil has been contracting on the evening open and then it's been rallying during the following day. So it did the same exact thing yesterday. Let me change this to, yeah, no, that's right. Yeah, so if we take a look at yesterday afternoon, which was the 6th, or here, it started contracting a bit. And then, I mean, it ended up rallying pretty hard on the day, but I actually mistakenly looking back, but I mean, who knows how it's going to go. I took some of the oil position down. I still have runners up and going, so I'm glad that I do because they caught this move here. But this is really starting to get essentially to the price target I was looking for in it, which was 77. I think still oil has the ability to rally up through this, but yeah. There's a couple other things I wanted to look at super quick. Let me get this hurricane stuff down. I wanted to walk through some of the financial news that we got in. So, German, why is that in here? That shouldn't be in here. I hate this. They keep getting rid of like my settings. Keep saving them and they keep getting rid of them. Let me see really quick. I'm going to update this so that my stuff is fresh. It just slows me down. I'm just going to start a new layout then. Oh no. That was a giant mistake. Oh, what a colossal error. This is the worst news. I'll load the most recent one. Ah. Okay. So this is close, but not quite. This ain't what I want. That's frustrating. Oy vey. I don't care about that. It's not that far off. I just need to add the news piece to this. I want economics. Cool. All right, not so bad. Now I have to reconfigure this again super fast. I wanted to talk to you guys about some of the data that we've had come out. We want that. Country, don't really care. Importance. This can go up here. And then we want, that's all fine. And then I just want to filter by importance. I want to get rid of zeros and ones. And then we want this to be this week. Okay, not so bad. All right, we're back at it. Off Putin says Iran's oil flow is disrupted. China will just buy more OPEC. Yeah. And I think that there's actually a fair probability of some of that happening. Like I fully anticipate seeing some artifacts of that. And then this needs to be gainers and losers, both. I like tracking it over the last 6 months. That's good. And then this, we just need to filter by vol over OI. We want that greater than 1. So the reason why I filter by vol in OI greater than 1 is that it helps me track more quickly, essentially what's going on. And then the other thing that I do filter is by security type. We get rid of ETFs. ETFs, you're going to see them move quite literally all the time. So there's not a lot to grab from that. And then I like having the description. This is fine, I suppose. Trade value. This is all fine. Sentiment can go further down. Don't care. Trade count, size. This can be moved down. Cool. So let's see what we have going on. I like taking a look through some of what we saw today. The reason specifically for that is I think the options chains themselves right now are a little bit more quiet, but we're starting to see some stuff popping up that's drawn my eye a couple times today. There hasn't been anything massive, like, you know, when I refer to like stuff that's hitting my scanners, there's not a ton that I'm seeing popping up in like GameStop and whatnot right now. GameStop was actually like really, really quiet today. I think a lot of what I'm starting to see is positioning leading into earnings. That's the overwhelming thought. So if we come in here, I'm just going to sort this by volume over OI, and this I'm going to move over here. Here. And then this way we can filter by this. Like this. That's interesting to me. Seeing SCHW rally that much. Let's see, 70 calls at the offer, 1,500. Let's take a look at that. NASDAQ now down slightly. Man, tech has just looked so weak, hasn't it? I had a NASDAQ position on that. I got stopped out. Like I exited so fast because I knew that I was getting in a little too early. I thought we might start to see a little bit of a pivot there, but I mean, we've just not seen the pivot. Damn. Kind of annoying. I think we'll have to keep a pretty close eye on tech, because the issue here is if tech starts to roll over, that really becomes like entirely problematic for the broader market, because small caps still aren't in a position to really prop things up. So if we start seeing tech not contributing to this, Off Putin says SMCI up almost 16% today. Let's take a look at SMCI. Yeah, it's up almost 16% off of fucking lows. Literally in the last 6 months, it's gone from 102 to now sitting at 47.75. Yeah, that's a terrible, terrible move. Looks like it's starting to gain a little bit of a bite, which is nice. But I mean, overall, it just doesn't look super healthy to me. Let's take a look at, we already did the sectors yesterday. Not much has changed. But let's take a look at like this here. This is exactly, I talked about this in the video yesterday, and it's worth now discussing again today because of where it is. But if you look at the percentage of S&P 500 stocks that are above 50-day moving averages, this still continues to contract. That, again, that's a general breadth metric that we can use to monitor like the rallying that we see in the S&P 500. How well is that shared across the board? And here, this clearly tells us that less and less S&P 500 companies are participating in the broader movement. And again, as this starts to contract more and more, this starts looking like a higher and higher probability of starting to roll over a bit, I think. Which, I mean, the S&P 500 doesn't look that strong right now to me. It looks like it's holding on, but this looks like it is just trending completely sideways here for an extended duration now. Essentially from the 26th at least. I don't necessarily love that. Let's take a look at a couple scans really fast. This is looking for kind of, I use this as just a percent change scan to look for stuff that's had pretty big moves. ADMA. Yeah, I love that. Really good growing earnings. This looks like a smaller market cap company. Yeah, this thing, what do these guys do? Biopharm. Plasma-derived biologics for the treatment of immune deficiencies and infectious diseases. Huh, interesting. Now, fun fact, one of the thing about the biotech industry is that there's essentially legal insider trading. I don't know if you guys know that, but it's kind of an annoying artifact of biotech. But essentially, there's different conferences and stuff that come up, and information that is not available to the broad public is released to doctors and people that go to those kinds of conferences. And they literally are allowed, there's no restriction against them trading off of that information. I don't fully understand how or why on earth that seems okay, but it is wild. It's a thing though. So one of the things that I'll do is I'll look at the options and stuff like this, and I'll take a look at like this. 25,000 calls compared to 1,800 puts. Somebody fucking knows something, because it's been rallying super hard. That's obviously part of this. Paula says the results of clinical trials are public. Of course, the results of, yeah, of course they are. I'm not talking about phase trial releases and stuff like that. I'm just talking about other conferences that highlight the movement of different drugs, where they're at in different processes and stuff like that. That there's a lot of that is not public. And again, the bigger problem I have with that is just the fact that different people that attend that receive the information, but there's no governing function that says that they're not allowed to use that information, which to make trade decisions. Like, to me, you shouldn't be able to trade that stuff. So the fact that they can is just noteworthy to me. But the reason why I bring that up is because if you know that, and then you take a look at the overall performance of the options chain in something, is, I think, let's take a look. Let's see when these things have come through. Grab all the series. Most of these are 17 Jan 25. Yep, these big ones. So let's take a look at when those 17 Jan 25s come in. So this is ADMA. And then let's go to this month. Nothing this month. Let's look at SEP. Here's some here. Some here, some here. So what is that? Small. Only a couple hundred here. So the other thing I can see is that a bunch of these people are sitting on pretty big profits. I'm just going to look at that 17 Jan 25. Small again. Go to July. Bigger. Let's go to June. Bigger, not massive. What's the concentration? The tens. Those are like the real busy ones. Let's do strike. We'll limit that to 10. And then I'm just going to open this up. We'll go essentially year to date. We'll go Jan. Today's what? October 7th. Whoa. Whoa. I need to confirm if I have these filters right, but I'm going to go back and look at 23 and see if this works. Looks like it's frozen right now. Oh, because it's, let's see. What am I missing? $17 Jan 25 tens. There's 5,200 of them. Here, I'm filtering by 17 Jan 25. Okay. Let's look at all of 2024. Okay. 130. How does this make sense? Riddle me this, Batman. Am I missing something that you guys are seeing? How is there 400 here? Oh, these are these filters, dude. I don't fucking trust. This doesn't help my trust issues with information because there's 400 here. But when I run that broader filter, they're not there. And I know there's 5,000 total. This says there's nothing in March. 400 in April. $198 there. What I wanted to see was something very specific, but it doesn't look like it's going to show me. So the other thing we can do, it's not my favorite, but since that data I don't trust, we go to the tens. Interesting. So here's something else that I like to do. If we go to the flexible grid, we throw in a 2x. This one, we color it as something obscure like brown. And then we come back in here, kill that, type in ADMA. Same thing, but this time we're going to send it to that one. Come to the chart. Let's see. So there was very little volume in here. Massive spike in volume here, 800. This was on the 17th. Right there. I mean, it's just kind of funny. Big spike in volume, like really big spike in volume. And it's just on this nice quiet 17th. So it looks like part of it is because of joining the S&P small cap. That really doesn't matter much. Don't really care. Off Putin says BlackRock updated their beneficial ownership of ADMA today. Same number of shares as Cohen owns GME. Must be a connection. Help spread the rumor. There might be a connection. Who knows? We are in dire straits here. We are essentially out of seltzer water. Completely out. I'm going to have to make a seltzer water run in a second. That's interesting, though. Let's get back to this scan and see what else pops out to us, huh? Right now I'm looking, well, I'm not worried about my portfolio. Do we want to scan for bullish or bearish trades? Because right now this is looking for bullish momentum. AEYE. Oh. heavy consolidation. So this is a, let me know if there's a close above this. Off Putin wants to look at SRRK. Let's do it. SRRK. What the fuck? What the fuck? What the hell is this? So news tied to the open at some point. Let's see. Okay, so it's some sort of drug release. I mean, I don't actually know if I care that much for this. This would be the kind of thing that we have to watch. We have to see how it does. Because obviously the move is there. But that's like a lot riding on a specific thing. Huh. Motor function measured by the gold standard. Patient's SMA receiving a pity bromab versus placebo. Did a 3-point improvement versus 12.5% of placebo. Patients receiving it, early motor function improvement. Huh. Very interesting. Yeah, this is the kind of thing Vladimir says puts. This is not the kind of thing that I would trade puts on yet. It's the kind of thing that I would monitor though, because there's no reference. Yeah, so it's like already essentially up to prior support. So like this is the kind of thing that I would be happy to play the down move if it happens. But this is one of the things that I think traders tend to do is, again, just like we've seen in the markets, we try to front run the down move, which it may or may not happen. We don't know. But I personally would wait for another day. And depending on how that day moved, then I would make a decision on whether or not I think that there's at least a decent entry to play the continuation. But I would follow the trend because, yeah. Putin says puts because of the shelf and public offering after close. What does that have to do with it? Then they filed a shelf registration and public offering right after the close. I mean, I just, the market doesn't seem to care about it just yet. So maybe, I mean, we'll see how it goes. But up 361% is fucking crazy. Absolutely crazy. Massive move there. Roaring Titty says serve. Let's look at some serve. I don't love it. Not to the upside. It looks like it's starting to move, which is good. The primary reasons why I don't love it to the upside are because, well, first, this is where it needs to break above for me to like it. And I'm just using the next volume node that's like the next most appropriate volume node, which is right there. I don't like that it had this big of a contraction before consolidating. So normally things that are showing really strong up moves, when they are more prone to show a continuation is if this pullback is like up to 5%. But this is a massive pullback, right? So it went from not even using the high, but let's just use near highs 21. And then it came down here to 6. Like that's way too much of a pullback for me. So does this mean that, as always, like it can't go up? Of course it can go up. But this does mean to me that first I would need to see it break above this 12 handle because that's just the next period of congestion that I see it getting into. And then I like the volume today on a relative basis, 13.8 versus 5. So that's good. So volume is expanding. Roy and Titty says it looks like it's trying, though. Completely agree. And it does look like it's starting to turn here, right? So I really like that it broke above this. That would be an important handle for me. But I always go back to the same thing. The question I ask is not, is this a place I could put my money? The question is always like, where is the best place for my money? So the way I would look at this is exactly that. If it starts breaking above this 1130 handle or this zone, essentially anywhere in this low 11s, then I like that. But if it's not doing that, then a little bit less so. Yeah. What do the options look like? There's some call OI here. And it looks like it's for 18 oct. That's actually kind of interesting. Why are these here? It looks like people are trying to play this. Yeah, trying to play this front run move. Ah, that's what it is. That's the stock NVIDIA bought a 10% stake in. Yeah, that's interesting. When did they buy their stake? Because that's actually really, really interesting. Huh. When it went into all-time highs at 24. Okay, so that's when it was done here. Got it. Interesting. Yeah, this is like a really curious case for me because I like this big move. I don't like what it did in earnings. I don't like this pullback. Like for me, if I were to trade this, it would actually be in the context of risk premium more than anything. Like I would probably, let's see. Yeah, like I would trade it for risk premium hands down. Selling something like the 7s at an 18 delta. Doesn't have anything higher than the 15s, which is crazy. The options are trash, but I still would try to trade them for sure. Like if I had a smaller account, to be clear. On a larger account to put on something like this at size would be very difficult, but I like this more for a risk premium play personally. Interesting find though. Let's see if we can find some stuff similar to that are kind of making these larger moves. Let's find stuff that's up at least 10% than yesterday. And then I'm going to do volume weighted average price. Let's take a peek through this. Back up we go. Roaring Titty says risk premium. What do you mean? It's a great question. So risk premium is essentially the excess. That's the excess implied volatility. So I'm grabbing a video for you on risk premiums right here. And then give me 1 minute. I'm going to be right back. I'm just going to go grab another seltzer water. Going with lemon. I think it would be cool if there was a way to like walk you with me to the fridge because it's kind of fun when I walk to the fridge, sometimes Thor, he likes to, I've taught him a terrible habit. This is one of his bad habits. He doesn't have many of them. I've trained him, I think, pretty well, but one of his bad habits is I like to fuck with them with my feet. So as we're walking, I'll like push him a few times and then he'll start like attacking my feet. So now sometimes when I'm walking, he'll start trying to like playing with my feet. So then I'll push him. And then like as I'm walking, he's like growling super aggressively, trying to get at my feet, which is, I just get such a kick out of it. One of those things, terrible habit to teach your dog, but I don't really care because he's a pet. He's not a working dog and he is hilarious. Like he's not like a police attack dog. It's epic. Rowan Titty says it's called a GoPro. Well, I mean, I could use my phone, but I think it would be fun to do it like on the stream. Zoom has this really cool thing where if I'm on a Zoom on my computer and I pick up my phone, I can transfer it seamlessly to the phone. That would be super fun to do with YouTube live stream because I also like to walk around. It'd be fun to go sit outside or something right now. Okay, let's get back to this though, and let's see what kind of changes we have over yesterday. Napa. Ooh. I like that. I like that a lot. So this is post-earnings announcement drift potential. Is this doing optionable? It is. What kind of options we got in here? Mashton says nothing on Napa. It was acquired for 11. Oh, damn. Damn. It looks like I had earnings. When did it get acquired? Here you go. I see it. So it looks like this morning. When's the deal going? Because it ain't over yet. The agreement includes a customary 45-day go shop. Yep. Yeah, so this thing ain't done yet. Interesting. Yeah, so this actually I'm going to add to my list. This is like a low risk general ARB play. Now, when I say low risk, it's relative because like if that deal doesn't go through for some reason, this shit would crater back down here somewhere. But I'll take a look at the options and see how probabilistic the deal looks like. And then Titty says, why did you say you like it? It's just going down. The reason why I liked it before I knew about the going private acquisition component is because this is also tied to earnings. So my initial thought was exceedingly strong earnings, post-earnings announcement drift. Like this would fit the criteria for post-earnings announcement drift literally to a T. So massive stock gap and then really solid beat on EPS. Those are some of the criteria. And typically speaking, you would see overperformance for the subsequent quarter. So that's what I thought when it looked attributable to earnings. Now, with the new information of it being tied to a potential merger, it's a little bit different. Well, I guess it's not even a merger in this context. It's just acquisition. But yeah, in that context, it's a little bit different for me. Not massively so, but a little bit. And I just realized I got to get my dinner order launched off here. There that goes. Yeah. So this, let's see what the options look like. Yeah, lots of people playing that. 7.5. So it's like a 30-day period. Let's see. I'm just trying to look per 100 lot. I guess I could have just clicked this button. I don't know why I insisted on tapping that a million times. It's like $650. Pretty low return. Like this kind of thing wouldn't be worth, for me, it wouldn't really be worth the effort. But I don't dislike it. Because essentially the way that this will move is Roy Titty says if it's being acquired for 11.10 and went to 11, then is it even still tradable? It definitely is, because right now it hit a high of 11, but it's trading at 10.95. So the way that this will work is the higher the probability of this deal is, meaning the further we go and the more probabilistic it looks like the deal is going to happen, it will move closer and closer and closer to the 11.10. So right now it looks like it's very probable. So with that being the case, it would essentially be a really small move. It would be a move essentially from 10.95 or wherever it opens tomorrow at up to 11, or, you know, probably 11.05, could hit 11.10 at terminal. But Roaring Titty says, but that's only 15 cents. Yeah, no, it's not a big move. But that, again, it's all about probabilities, right? It's not just about the size of the move. So to your exact point, the move essentially would be capped at whatever it's set to be bought out at, 11.10. But it's a very high probability that it will hit that 11.10. So then again, you can structure a trade that can take advantage of the higher probability play. So it really entirely depends on the thesis of a trader and stuff. Like, again, for me, if this had liquid options and overall it looked good to me, what I would do is I would probably do a few thousand contracts. But the problem is like, it doesn't suit my size like that I would want to trade it at. So it just makes it something that I functionally couldn't trade with even anything resembling a reasonably sized position. So because of that, there's not much to be done here. But let's say if that weren't the case and it had good options, what you can do is, what I would do is scale in a really large position that's designed to take advantage of a very small price movement. And I would fully expect to take that position down before we get into the announcement, right before. So it's just a little cleaner that way. So it would be trading that little bit of a move, but exactly to your point, not a big move at all. Yeah. Mashton says, would it be risky to sell puts? Yeah. I mean, it would be risky in the context of if the deal doesn't happen. So let's say, for example, you come in here to sell a put for 39 days out. You're going to literally collect $5 if you can get a fill. And on that $5, let's just pretend the deal doesn't go down. And let's say it goes back down towards where it was trading before. Let's just keep it beneficial and call it 5.5. You lose $445, right? So the way to look at that is it's the inverse. Is there a high probability of you losing $445? No, it's a low probability because it looks like the deal is going to go through, but you only make $5. So then you have to ask, is it worth risking low probability, but a potential to lose 445 to make 5? And again, we can literally look at Eric's super ugly workbook that does a bunch of weird things now. And let's say we have this And then let's say our risk is 445. So let's take a look at a couple scenarios. If our probability of profit, let's just call it 80% to start. You can see that in this case, it has a slightly declined edge, meaning slightly negative edge. So if you look at the probability of profit, 80%, probability of loss, 20%, the expected return on this is negative $85 over time. So this is no good. So now we need even higher probability of profits. So let's call it 95 and 5. Still negatively expected, right? So like this is showing that the trade just doesn't make sense. Now I'm actually just curious where this would make sense. So let's do like 99.9 and then let's do 0.01. Okay, so this isn't a entirely negative expectant structure, meaning there is a critical point where the probabilities would work out, but it obviously would be like really, really skewed. So yeah, not a good trade in my opinion. I wouldn't do that for $5. But I walk through the analysis just so that you understand how to analyze this stuff. B. Williams says, one question mean to ask, you said in one of your podcasts that most people don't realize that you can make money on options without it hitting your strike. Is that because of gamma? No, it's just because of the way that options behave. So I have a video on this specifically. I made it a while ago for the meme stock folks. It's about buying call options smarter, this video. But essentially, that's exactly correct. Like, you don't need the option to hit your strike in order to make money. And the overwhelming majority of people completely don't know that and mess that up entirely. So the premise here is options, specifically calls, appreciate in value as the underlying goes up. So if you buy a super far out of the money call and the underlying goes up, as long as it goes up enough to overcome the theta that would decay out the time value, then it's profitable, even though it's not necessarily hitting your strike at that point, which a lot of people kind of mess that up, I think. Oh yeah, so we have earnings coming up. We do need to look at this. So we have Pepsi, and then we have JP Morgan, Wells Fargo. We looked at all these yesterday, so we're good. Because I don't know if I'm going to trade the banks yet. I think I want to. The financial sector has been doing pretty well here, kind of, just holding the line. It's not doing anything impressive, but it's also not falling out of this range. So I actually kind of like that. Reese said, oh yeah, Reese was answering, which is perfect. B. Williams says, anybody have good charts that some possible head and shoulders? I don't really scan for those much personally. So I don't have anything for you there personally. But we can see, Reese says Nike. Yeah, let's take a look at Nike. Ugh. Get rid of all this stuff. Looks terrible. This looks like bearish play. This actually looks like a really nice downside play. I'm gonna keep an eyeball on it. So this looks like, yeah, so I already have a thing there. That looks like first threshold. Yeah, this looks ugly. They've been trending down for a hot minute. Let's look at a few more before I wrap up, and then I'm gonna pop off in a little bit, get ready to take the pup for a walk, grab some dinner. I am doing Mexican tonight. Matt says, any thoughts on Spirit Airlines and their recent downturn? Yeah, let's see. Option strategy would be a leap. What do you mean? Buying a leap is just a duration, and just for those that don't know, it's actually leaps. Again, it doesn't matter. I know what you mean, but some people think it's like leaps like that, meaning plural. It's not. Leaps is acronym. So long-term equity anticipation security. Trading it to the upside, 0% chance for me. There's no way I would trade this to the upside. I always go back to the same thing. The question is always the same. It is not, could something go up? It is this the right place for my money? So for example, if I'm trying to look for bullish plays, I'm looking for stuff that's showing strength. So let's take a look at a couple ideas here. So stuff that's up greater than 10% over 180 bars. So that's looking at 6 months. And then let's take a look through these. Let's find stuff that is showing the most strength over the past. There's a lot of A names. I'm going to have this sort by oh, it's because there's just so many. I'm going to add a secondary filter. We'll add weeklies. That'll cut this list down massively. Yeah, so 301 now. Perfect. So now we have ASTS. So first, anyways, before I even start analyzing this, let's just start with the difference between what we're looking at. Is we're looking at something that's gone from 1 to 39, massively upward sloping, standard deviation channels or linear regression channels, whichever you want, upward sloping. Long-term moving averages are upward sloping. Short-term definitely are rotating over, which I don't like. There's a process that I use that's called stacking strength. And the idea is before I place a trade, I want to stack as much strength in my favor as possible. There's no reason for me to force a position on if there are other better looking positions. So even in something like this, as I'm looking at it, if there was nothing else that looked good at all, then sure, it's feasible to do something in here. But I'm going to continue looking through this list and I'm going to find things that look better than it and explore positioning in stuff like that. So let's take a look. Kava. This is a good example. So this gets an alert with a close at or above that. And if I look back over 6 months, it's had really good earnings. And now it's running standard post-earnings announcement drift. Moving averages are organized, even though short-term moving averages are starting to converge a little bit. I don't necessarily love that. But like the 20 positive sloping above the 50, above the 150 in this case, I like all of that. This is a 200. I'm actually going to change this to be a 6 month. Yeah, I like moving that in a little bit more. So yeah, that's essentially what I see here. Is there are things that to me look much, much stronger. So now another way that I use this process called stacking strength, which I realize I probably could do a video on this. I'm going to take a note for myself. But the idea behind stacking strength is to put as many things in our favor as possible. That's mostly what I'm trying to do. That's how I think about it. So another thing that I'll look at is finding sectors that are performing well. So here, again, I see strength in communications. I see strength in financials. I see some strength in industrials. I see strength in utilities. So utilities is starting to fall off. So I would start by looking, what looks best to me here is industrials. Industrials looks the best. Financials, secondary. So then what I can do is I can either search within those sectors. So I can look for stuff within industrials. And notice how many are in this list, right? 266 names pop up in this list. So there's a lot of stuff that's doing well. Then I might look for stuff that's up across different time frames. So in this case, I'm looking at stuff that's up over the last 6 months. I'm looking at stuff that's up over the last year. And I'm trying to find things that are exhibiting, again, the behavior that I'm trying to find. And in this case, I'm trying to find something that's going up. So now let's poke through some of these. This is a great example. This thing's just running up to the moon. It broke out massively on earnings and is now exhibiting post-earnings announcement drift. And this is a pretty easy play. Now it becomes higher and higher risk the more it runs like this. But if we look at something like AGX, I don't know anything about it, but essentially I would place a stop somewhere right around here to give it a little bit of room to move, maybe something like this. And then if I zoom out, I mean, it's just had a massive move. And it continues to maintain this really strong move. So that's how I do it. And actually, this is what we spend a lot of the time on the Outlier Pro sessions doing. Because like, this is exactly how I look for trades. Like if I start with, do I have an origin for the trade? Meaning, do I need to fit something to the portfolio because I need to fill a gap? Or do I need to just scan for different opportunities? So I have this video, which is about scanning for trades. And then I have another video that I put out not too long ago. Let me find it really fast. Got to look at my completed trades. Oh, that's it. This one, which is about managing an options portfolio. So between both of those, what I'm doing is I'm trying to have as many factors in my favor as possible when I'm building these kinds of trades. Reese says China stocks tanked. Did they? Because I exited my BABA trade a little while ago. No, BABA's still crushing it. I get out of BABA here, I think. So I missed a few points in BABA, which again, I'm always okay with that. That doesn't bother me. I don't want to take some sort of gap down risk. Off Putin says that AGX ticker is not liquid. Let's see. Yeah, so it has no options. I would just trade shares, buy the stock. The bid ask on the stock is not great, but it's still totally reasonable. That's one of the things I find options traders sometimes get myopically attached to. Is like, you don't always have to trade options. Like if options don't fit the thing that we're trying to trade, especially with these kinds of trades specifically, when I'm looking for this kind of momentum, these stronger, larger percentage moves, you're not going to see big stocks making these kinds of massive percentage moves typically. So you kind of have to expect that you're going to be trading things that are a little bit smaller. So you have to be a little more adaptable with these. Now, this surprises me because it shows that it's up 240%. BYRN. What's this? I had big news come out on the, and it has earnings coming up. So this would be wait until earnings. Yeah. Cool. All right, gang. I'm going to sign off. I'm actually going to start working on that video on stacking strength because I think it's a really hopefully really useful concept for you guys. So I'm going to start outlining that now. But as always, if you need anything, let me know. Be an outlier. I'll see you guys later.